Hi guys, hi everyone. Good morning, good afternoon, good evening, guys. Wherever you are, welcome to IC Markets webinars. How are you guys doing today? All right, shall we just wait for another 1 minute? All right, and I will start the session, guys. All right, shall we just begin our session? By the way, you guys can see me and hear me clearly? Yes? Okay, so just begin again. So again, guys, thank you so much for joining my session today. You can see on the screen, all right, we today we will talk about the RSI divergence and failure swing. Okay, and of course, before we start the webinars, guys, always disclaimer first. So basically, everything in this video is purely educational in nature. All right, nothing in this video should be considered as an investment recommendation or any kind of training advice. So you are responsible for your own trading decision. Okay. Oh, you guys cannot see my screen. Can you see my screen? Yes. Okay. Um, you guys can see my screen, right? Oh, okay. Okay, so about myself, guys, my name is Peggy. I'm investment analyst and prop trader. So this is the agenda for today. All right. So I think this is not the slide here. I think I missed out one. This is not. So sorry about that. Um, uh, I missed out one the agenda. Um, okay, this is the one. Apologies. Okay. Okay, so is this not a breakout? Okay. All right. So we're going to talk about the detecting the divergence early. Okay, range entry and range exit. Eh? Wait, guys. Not this, not the one. No, no, no. That's wrong. It's here. It's not this. It was this. This one is another topic. Okay. This is the one. Okay. So we will talk about when the divergence is useful. All right. And the second confirmation rule to avoid the entry early. Okay, and then we're gonna talking about the where we're going to play the stop loss and take profit, and then example. Okay, so what is divergence? So the quickly recap. So basically, the divergence is just occur. Okay, when price and the RSI is move opposite direction. Okay, that is mean of the divergence. Okay, and RSI I'm using the default setting, which typically is a 14. Okay, and we know that overbought zone, okay, price stay above or more than 70%, and then oversold zone is below 30. Okay, but I know that some of the trader they might say 80-20, okay, or 75 and 20. Okay, but I personally just stick with the 70 and 30, just use the default setting. Okay, I did not use more than that. Okay. And another one. We have two types of divergence. Okay, we have the regular divergence, we have the bullish. Okay, and then we also have another one is the bearish. So for the bullish one, meaning that price is make the lower low. Okay, we know that when price is falling, okay, price make the starting to make a lower low. Okay, but the RSI, okay, is make the higher low. Okay, the RSI maybe falling like that, and then they start to make the higher low. Okay, that is a bullish divergence. We're going to look at the chart together later. Okay, and the bearish divergence. Okay, price make the higher high. Okay, like that. Okay, but the RSI is make a lower high. Then they start to make a lower high. Okay, this is a bearish divergence. Okay. For the hidden divergence, okay, hidden divergence is very rare, okay, but whenever you spot the hidden divergence is equal to continuation signal, okay, this is very rare, but it's very powerful. Okay, for regular divergence is for reversal signal. Okay, whenever you spot hidden die is equal to continuation in the trend. Okay, so when divergence is useful and when it's not. Okay, so when it's useful, you're gonna spot the divergence when price is at the support or resistance level or at the key level, demand and supply. Okay, and divergence at support and resistance when you see it at the confluence. Okay, if you see the divergence at support and resistance and plus the Fibonacci level, okay, that is super confirmation, meaning that you can buy or you can sell, but it's not 100% confirm that price gonna fall or price gonna rise or gonna continue. You always have to set a stop loss. Okay, renting or Shopee markets. Okay, so RSI predictably divergence setup more reliable after extended trend move. So when price had run far from the mean, extortion signal may more valid. Higher time frame alignment. So you're gonna see the divergence in daily time frame is more, and so it means more reliable in the M15 divergence as well. Okay, so if you see, meaning that in the D1, okay, let's just say in D1 we spot the bearish divergence. No, this is the bearish divergence. It's a bearish divergence here, right? And then in the lower time frame, you also spot the bearish divergence. Okay, this is the align, right? Meaning that this is in D1, okay? This is M15. So when in the D1 time frame, okay, you're gonna see the price gonna rise, right? In M15. Then you spot the divergence, which is this is the zone, which is let's just say this is gonna be the OB or the block, okay, or the block in D1 daily time frame. So when price you zoom in to the lower time frame, you see the divergence in M15, you can trade. In this one, it can add, like you have a confidence in the short at this zone because we have the OB. In our OB, okay, we also have the divergence in D1. Then in the OB, which is M15, you also support the bearish divergence as well. Okay, so you have the confidence in like short at this level. Okay. Don't worry, we're gonna look at the charts after this. Okay, I have an example for you. Because if you love to trade gold, right, you're gonna spot a lot of divergence in gold as well. Those like bearish divergence or bullish divergence, but it's really rare, okay, that I'll like spot the hidden die in gold. Okay, so for the confirmation rules to avoid entry early, okay, you got to always wait for the RSI to exit extremely soon. Okay, so don't enter just because the divergent form at the open oversold. No, right? You got to wait for the RSI to close back, okay, above 30 bullish or below 70 bearish. This is the first confirmation. Okay, this is what they say is a confirmation. Second, you wait for the price candle, those are price action for the confirmation. Okay, require a bullish engulfing candle, pin bar or hammer candle for the long. Okay, at the divergent low, which is we're gonna look for the bullish divergence. Okay, for the candle pattern plus divergence equal to much higher and probability setup. Okay. Okay, we have how many confirmation? We have price action, okay, and then price is happen at the key level, okay, and then you spot the divergence, okay, you can trade. Usually 2 to 3 confluence, you already can, trade at the key level. 3, structure break on the lower time frame. Remember that I say if we spot like D1, let's just say this is a D1 and this is the bullish OB. This is a bullish OB, okay. It's a bullish OB, okay, bullish OB, okay. In the low time frame, which is the in the M15, right? You're gonna see you need to wait for price to like make a lower low, low high, right? Until you make the chain of character in the lower time frame, which is within the OB in daily time frame. Because why? Whenever you zoom into the M15, you're gonna have very tight stop loss. Okay, you're gonna enter based on the OB. You're gonna have very kind of wider stop loss based on D1 time frame. But because we want to have very tight stop loss, you need to zoom in. You wait for confirmation, wait for chain of character, and then what you're gonna do, you wait for price to pull back, and then you buy. So this one is gonna be your buy entry, and then this is gonna be your stop loss. Why? Because we already see that this is the chain of character that happened in the OB in daily time frame. Plus, let's say if D1, you see the divergence, okay, here have a divergence as well, bullish divergence, M15 also price have made a chain of character, you just have the pullback somewhere here and then you buy and then you target. I think more than 1 to 10 or 1 to 20. Okay, if you were to enter in the D1 time frame. Okay, guys, do you get it? Okay, continue. Let me remove this. Okay, so we're going to play the stop loss and take profit placement logic. So whenever we spot the divergence, okay, you're gonna play the stop loss, okay, just slightly below the divergence swing, okay, not at it. So not have to be exact as swing, because sometimes primer just come back and hit or clear the stop loss and then reverse. So you can add in 5 to 10 or 10 to 15 pip below the swing whenever you spot the divergence, okay? Second, bearish divergence, right? You place the stop loss slightly above the divergence swing high for the buffer, okay? And then avoid round number. So especially like, for example, gold, like round number like 4,800 or like 5,000. So you shouldn't put a stop loss exact at the round number, slightly add a few pip above. Okay, because someone probably might clear, for example, like you say that you short go at 4,000. Let's just say you short go for, let's just say for 4.7. Let's just say 4.7. Okay, let's just say you said 4.795. Okay, this is your sell entry. Okay, then you shouldn't put stop loss 4,800, because you said, okay, I have a fixed stop loss, so my stop loss for the entry at 50 pip, right? 50 pip. So price come to 4,801 plus it trigger your stop loss and then it's reverse. You shouldn't put exact 4,800. You shouldn't put at like 4,800 plus 01. So to me, I will put like 4,803. Okay, that is my for me buffer, or 5,806 for my buffer, or at least price went slightly above and then it will fall from that. So you see that whenever you get a stop, like stop hunt, okay, hit the stop loss and then like fly away and reverse, then you need to see on your left, okay, on the chart, if there is a key level or on a higher time frame where you put the stop loss is like on a higher time frame at resistance level, for example. So you have to always look for multiple, you should look at the different time frame as well. Don't go for like fixed stop loss 5 pip, 10 pip, 50 pip. No, always set slightly above the swing high or above the resistance level, and then you add like 10 to 15 or even 30 pip, depend on your loss size, depend on your up count size as well. So if you were to follow those kind of like signal groove, right, they'll say, okay, this is your entry, you just buffer 30 pip, 50 pip. No, right, always look at the key level and then you place the stop loss above key level. Okay, avoid tight stop loss. So if price need to move 50 pip to confirm, okay, 10 pip stop loss will get stopped out, definitely, because you got tight stop loss. Unless my strategy, if I want to have very big tight stop loss, which is I will see the confirmation at my key level, okay, price action, another bear in gap, my stop loss going to be here. I can have a very tight stop loss with the bigger lot size. Okay, of course I don't overtrade, because we have to always put the stop loss always. ATR based buffer. Okay, if you don't know how to load the ATR, I'm gonna show you guys later. So you can use the ATR. ATR stands for average true range. Okay, so you can use 0.5 to 1 ATR for the buffer. Okay, at the structure level or the key level. Okay, so the take profit TP1 always nearer structure. So let's say you were to buy, like we buy from the support level. This is your resistance. So you buy price is falling. You shouldn't put the stop loss exact at the key level or above the resistance. You're gonna price not gonna hit, because why? This we sell the resistance, right? You're not gonna buy the resistance. So put slightly nearest to the structure for the buy entry. Okay, for the sell, this is resistance, this is support, price is falling. Put the take profit at TP1 before the key support level. Don't put below, because we buy at the support, usually price will bounce and gonna hit the stop loss. So placing the take profit is very important as well. Okay. The previous swing high and the swing low, the TP2. So I have only two TP. First TP is always slightly up, slightly before the key level. Okay. Second TP is gonna be the next, the next resistance level or the next support level if price break the key level, which is like the first support or first resistance. The TP3, usually I don't say it because I'm the day trade, but TP3 you can based on those like read and reward. You want to aim for, you want to get like 1 to 3, you can. But if you want to hold until up to TP3, then you need to use the trailing stop loss. Okay, you need to use trailing stop loss. Okay, or you can do Fibonacci extension, because a lot of the trader use Fibonacci extension 127.20 or 161.8 for the take profit, meaning that this is our high, this is our low. Let's say you want to buy from the support level at the swing low. Okay, and then price is rising from here. Okay, if price break above this high, okay, above this high, which is 100%, okay, this 0 for Fibonacci, right? Is the Fibonacci. If price break above, then they're gonna use the 127 TP1 and 161.8 at a TP2 for the whenever price is where close above the resistance level here, the recent high. Usually you want to buy from here. This one gonna be my TP1 for sure. If price break above, pull back, I'm gonna buy target 127.20 or 161.8 for the TP3. All right. And the last one, avoid greed. So don't be greedy. Okay. If price store at the resistance level plus a new bearish divergence from exit, don't hold. Okay. Let's say you want to buy, see in the support level, price fly rising, you know that this is the resistance level, and then price when about to hit, you need price stalling there, stalling, rejection, stalling. What are you gonna do? You should exit. Because high chance price might just reverse. Okay, so you buy from here. Imagine you buy from here. You set your break even here. Okay. From here, you know that if price falling, it's gonna hit your break even, but why don't you close? Because this is your hard work. You have to work here, price rising, maybe you wait for 2 hours, price to reach this level, almost hit your take profit, but then you can see price is falling, and then you don't even manually close your entry. Maybe from entry to where the price go, somewhere let's just say 1K. But if price falling, hit your break even, or maybe your stop loss here, you shift stop loss to somewhere break even, maybe you earn $100. From 1K to $100, how you gonna feel? You will you will like lose motivation, okay? Because 1K compared to $100, I just close with 1K. Okay, if price rising and stalling around at the resistance level. All right, just close. After you close, let's just say if you close and then price break and hit your TP3, what are you gonna do? You're doing nothing. You wait for the next setup. This is all about back to trading psychologies. Okay. Okay, and then one thing, if you're a new trader, you shouldn't care too much about, risk and reward. I know that whenever you attend a webinar, people are talking about, okay, risk and reward should be 1 to 2, 1 to 3, or 1 to 4. Okay. Or I trade this trade or maybe your friend said, okay, this trade I got 1 to 18 risk and reward. To me, I feel nothing. Why? You shouldn't be like focused too much on risk and reward. What you need to focus, you focus on the structure, you focus on the market condition on the day that you trade. Let's just say the day there's no new market, so quiet, and you always say, okay, I want to get 1 to 2, 1 to 2, 1 to 3. Maybe price just go ranging, not even hit 1 to 1. Okay, you know that you already hit 1 to 1, price is revert back again. Maybe from your profit become the negative, and then you price rising again, and you did not close. Maybe end up you might hit the stop loss, or end up you might hit the take profit 1 to 1, 1 to 1, 1 to 2. But to me, I shouldn't bother. I mean, I did not care much about 1 to 1 or 1 to 2 about risk and reward. To me, I personally cares about the structure, where my entry, okay, where is my take profit, where is my stop loss, what is the market condition on the day that I trade. If the market is being ranging, then I will gonna trade with the range market, or I don't trade. But then if the day price is like very super strong, like trending uptrend or downtrend, and then okay, I might can aim 1 to 1 or 1 to 2, or sometime because I wait for confirmation, right? Sometimes I may not get 1 to 1 or 1 to 2. Maybe I get like less than 1 to 1 risk and reward. But to me, I'm okay with that, because sometimes I might put my rate entry, right? So let's say, for example, let's say this is my resistance. Let's just say this is my resistance, okay? And this is my support level. So let's say you want to aim 1 to 1, just for example, if price falling and hit here, okay, I'm gonna get 1 to 1. But sometime I got the red entry at maybe somewhere at this level. Okay, if I want to aim 1 to 1, my take profit 1 to 1 are gonna be below my support level, meaning that high chance I will get a stop out, or price may never ever hit my take profit, because this is the support level. My entry was here, my literally was 1 to 1 here. So if price falling this level, high chance is going to bounce and then continue to go higher. If provided price on uptrend, okay, if on uptrend, price come here and then continue to go higher. So you're gonna short here. Okay, I did not close. Price might go back and hit my stop loss. So that's why I say it depends where my entry, and then where the key level. Then I will put my stop loss. Let's say I'm short here, and then my TP should be somewhere slightly above the resistance. So if I measure, maybe the risk and reward less than 1 to 1, but I'm okay. Okay, but I'm okay. So that's why it depends. You shouldn't think too much or care too much about the risk and reward. You should be like flexible. Okay, I don't have a fixed stop loss. Okay, mine is a dynamic and very flexible. Okay, and then we continue again. You guys have any question? Okay, no question. Let me continue. Okay. Okay, we're gonna do the example. Let me show you the example of gold trade here. Hang on. For example, okay, let's just look right here. Okay, we are in gold. Okay, we in gold right now. So right now, gold is testing our OB. So now this is my buy zones. Okay, so this is my buy zones. Now I want to see the confirmation. If I can I buy here? Okay, I zoom to the M5, M15. Okay, for the M15, within my OB, I have another entry here. I have another narrow the zone. So this is my buy zone. Okay, my buy, so I buy here. My stop loss is gonna be below 47, I got 80 below that. So if M15, now the condition is if M15 closing with bullish engulfing candle, we're gonna wait for price to pull back. I'm gonna buy, but I already buy, right? Because this is my buy entry in OB. We go to the M5. We go to the M1. Okay, M1 time frame, we can say, okay, lovely, right? Price make the double top, double bottom. Okay, in the lower time frame, if the body can close above 47.92, okay, we can wait, kind of wait for the pullback. If you never enter the below here, we can wait for the pullback. The body have to close. Okay, you have to close with the body close above, like the body close above. Pullback, we can buy in the lower time frame, meaning that if the body can close above 47.92, meaning that M15 gonna close with the bullish engulfing. Okay, you see that? Here, I just put it here. At least the body close above 47.91. Okay, if the body close 47.91, I'm gonna put my take profit slightly before, let's say, for 800. Okay, but of course, price have to close. Price might expect this the small OB at 97. Always they have to break. This is can say that this is a resistance level in the M5, meaning that price have to close above at least 91 and then 95. Okay, you see that? Just now, from this swing to this high, it's about 600 pip or 60 pip. Okay, so it's about 2 minutes, less than 2 minutes. So it's 2 minutes, M5, price close with bullish and gap, you can buy. Because why? This, the blue box is our H4 OB. H4 OB. Okay, here, right? H4 OB, so we buy. So we buy. So right now, 1.5 minutes for this candle to close. If they close, meaning that they're gonna create the what OB bullish order block, right? This is the reversal pattern. What about do you see the divergence here? I don't see the divergence yet, but in the lower time frame, which is the I take out this one later. Okay, what do we see? We see double bottom. Okay, close above, close above. Okay, lovely. If really, really lovely, have to close above 47.95. 47.95. Okay, 47.95. Do you buy at this level? This is our buy zone. But because we want to narrow the zone, this is our buy zone. In the M5 is have the OB here. Okay, that's why we buy. Okay. Just now price go all the way to 92, right? Or 92 here. Let's just see how it's go. So M5, if you did not have the entry, if they come back here again, you can here. But you have the entry here, you hold. If you did not, if price falling around this level, around this price, you can have another buy entry. Okay. Okay, all the way up. TP1, you go to buy here, the quick one, because we see the confirmation, right? TP1 to make sure 96. TP2 slightly before 4,800. If price can stay above 4,800, you can wait for the pullback and then you have another buy entry. Okay, guys. Okay, now price is rising. So now another key one, this is the resistance level in M5. It have to close above 4,000. Our target 4799. Okay, 4799. Okay, I think it can stay above this. Okay, so let me see the divergence on the other time frame for the bearish divergence. Okay, here. Let's just talking about this, right? I'm gonna replay and move back here. Okay, in this one, you will see that price is make the higher high. Okay, and you see that the RSI is make the lower high. This is a bearish divergence. Okay, this is the bearish divergence, guys. Okay, this is the bearish divergence. I saw the divergence in BTC in the weekly time frame before it fall, the big fall here. There is the bearish divergence. Okay, you see that? Price make the higher high, indicator is make a lower high. This one as well. This is the bearish divergence before price is falling. Okay. This one as well. Where is that? This is bearish divergence. You see that? And price falling. Okay. All right. Another. Let's look for bullish. Price make a lower low. Indicator is make a lower high. Here. Eh? Here. Okay, it's here. Right? Price make a lower low. Indicator is make a lower high. This is the bullish divergence. Okay. Let's look at gold. I saw the divergence in the, I think in H1, when price is make the all-time high, or in the lower time frame. Okay, I spot that this is the bullish divergence. Okay, and price continue. Bearish, but this one we don't see the bearish divergence. Okay, these are the swing high, right? These are the all-time high. Okay. Price is close below the swing, and then you see your price action. This is your price action. Yeah. Okay, this is your price action. Okay, you see that? This is your price action. I'm gonna move here a little bit. I want to go to the lower time frame. Okay. Now, I start to spot the divergence here. If you cannot see, you double click. Right? Swing. Let's go to the M1. Okay. M1, you'll see the divergence very clearly. Let me see. Right? And then price is falling. This is the M5. Right? The divergence is happen here. You will get the spot there, then you sell. Another one, you also can see the price is had the close below 5586, which is the body is close below. You see the rejection, rejection, rejection. All right. Okay, so for the pre-trade checklist, okay, so clear divergence visible between price and RSI. You know that the indicator that you can use to identify, we know that we use RSI, you can use stochastic, or you can use MACD, but if you're new, right, recommended to use the RSI because you're gonna spot the RSI very clearly, okay. Second, the divergence occur at the key structure level, support, resistance, or at the swing high, the swing low, okay. RSI was in extreme zone above 70 or below 30 or 1 or so. RSI had existed the extreme zone confirmation tick present. Confirmation candles such as engulfing candle, pin bar, or hammer, okay, at the key level, and structure break on lower time frame observed, okay, then you can short, meaning that, right, if you're gonna see at the lower time frame, this is mean price break. Pull back, you sell somewhere around these zones. Okay. The trading market with no one resistance you should avoid. Okay. Entering on the divergent candle itself, so you also have to avoid it because sometimes that's called fake divergent because divergent have to where happen or occur at the key level. So if the in between here, and then you see the price seem like make the higher high, but then indicator also show the divergence. No, right? Because the key level is above here. Unless you wait for price to kind of break off chain of character and you pull back, and then you can sell. Okay. Stop loss placed at exact swing high and low without buffer. Also avoid. Risk and reward ratio is a minimum 1 to 5 or 1 to 1 before the entry. This is subjective to me. Okay. Volume support the reversal signal. Okay, if you trade with the volume, you see the volume that's you have kind of a lot of buy volume right now. Okay, that is support your reversal signal. Okay. Position size respect 1 to 2% make risk rule, which is risk per trade 1 to 2% on your account. Okay. If you trade a prop firm, nowadays a lot of the prop firm they implement or they have the rules that risk per trade is 1%. Okay, if you take the evolution like a stage, right? They don't have a risk per trade. You can trade freely, you can trade new, okay, you can trade like kind of gambling whatsoever. But once okay you pass the test, okay, then you go to funders account or you go to funder stage. They're going to implement risk per trade. Okay, 1%. Some of the prop firm, okay, they also very strict on trading during the news event. So some of them they might implement like plus minus 15% or plus minus 5% or 10% before and the news release. Okay, so you have to take note of that as well. Okay, so the key takeaway today, guys. So divergence is a warning signal, okay, not an entry trigger. It is a warning signal, not an entry trigger. Okay, always wait for confirmation. Okay, the context matters because divergence at support resistance is better than divergence at the open space. Okay, that's gonna be the fake divergence. Always wait at the key level, spot divergence, price action. Okay, RSI is also at the overbought, then you can sell. Okay, or and also below 30, you see the bullish divergence price action, then you can buy. Use the 5 confirmation rule to filter out bias setup. Never skip stop loss placement. Okay, structural level plus ATR buffer in the standard. Okay, I forgot to show you the ATR. I'm gonna show you guys later after these slides. Failure swing are underrated and often cleaner than divergence setup. Uh, quality over quantity. So 2 to 3 high confidence is up, bit 10 medical one. So usually you shouldn't trade more, you should trade less, then you shouldn't over trade. To me, I trade about 3 times per day. Okay. ATR, okay, you go to ATR, okay, you go to indicator, you use the ATR every 2 range. Okay, here. How to look here? A quick, simple like a method is that if you want to trade gold, okay, based on the H1 time frame, you got to know that in H1 time frame, gold move about 150 pip. Okay, 150 pip for gold move, meaning that let's say you're gonna buy gold now at 4791. You're gonna buy, go for long right now, exact, let's say here. Okay, recent reward you can get go to 1 to 1. Okay, if you want to buy here, okay, 1 to 1 recent reward, but they will say that they move how many? 15 pip, 150 pip. Then you need to chip your based on stop at 15. Let's just say 15 pip, somewhere around here. Then you take profit, also at 150 pip. That will be somewhere, let's just say around this level, based on the ATR. Okay, but then you say you want to get more than 1 to 2, so your take profit would be where you can look here, 1 to 1.5 is somewhere at this level. Meaning if you want to buy here just now, this is going to be your stop loss, this is going to be your take profit, which is 1 to 1 risk and reward, right? But right now, price is not close above 4,700. I go back again. Here. This is close above, now it go back to this buy zone. Can we buy? Can we buy? Yeah. Then we just buy based on a technical, okay? But support, if you're gonna see, okay, this is gonna be our buy zone. Okay, this is gonna be our buy zone. Then stop loss, you can have a high stop loss at 47.84. Okay, but this is our buy zone, right? Because this is OB price close above, which is I say the reason price falling because this is my like a supply zone, but this supply zone is already like taken because of this. I'll go to this supply zone and then falling. We're gonna connect. See. Okay, so it's already bounce 20 pip, right? 20 pip. Let's see how whether from here they're gonna go to this at least this high 47 and then 4,800. Okay, but then if price hit stop loss, okay, then I'm gonna see the structure somewhere within this level again. But if you put the stop loss, you can put stop loss below 4,780. Okay, because this is a H4 OB. Just now we see the bounce, right? But then you see that there's still strong selling, and then in H4, actually H4 also show us the bearish end gap here, right? So we're gonna see how this level is gonna hold. If not, if cannot hold, gonna hit the stop loss, and then the next buy zone is gonna be at this level. This level. What strong selling? I think we're gonna have a pre-market for the London session. Oh, okay. Put stop loss 47.79 or 78. But just now I already hit the take profit for just now buy entry for touch. Okay, at 96 already hit take profit. Now it's falling because remember they cannot go beyond this OB here. This is bearish OB. Okay, let's clear. Let it clear now. Either I say okay, it's clear the liquidity. Now I think it's time for them to push up. If this one, they're gonna rise from this level. Mm. You guys have any question? Okay, let's continue. Let's say if this one they're gonna clear the liquidity. Okay. Okay, so now the ATR. Okay, for the ATR in daily time frame is about 1,112 pip. Okay, 1,000 plus for daily time frame that go move. Okay, this is ATR, or you can just look here. ATR here, it's about 1.3K pip. Okay. Any question? No question, guys. So that should be all for today, guys. Thank you so much for joining my session. Okay, let me identify the key level for you guys. Okay, for gold. Let's just set this one today at the resistance level of first resistance. Second resistance. I'm gonna set this one as my first support. My second support, I'm gonna put it here for gold today. Okay. I'm gonna give you the zones since this is the zone for us. Okay. Entering the zones almost 100 pip. I'm gonna see whether they're gonna clear. Either they're gonna clear this liquidity. Then we can target at the first swing first high. Meaning that this is our buy zones. Okay. But what I want to see if they clear liquidity. Let us say, right? They come, they have go, they clear liquidity. If they can go back like this, pull back, I'm gonna buy. Okay, something like that. Gonna see how price react at these zones. If they're not, then we need to wait for the price action. Now I think the safe one, wait for the price action. Could be bullet engulf or pin bar. Okay. What about the RSI? Okay, RSI start to form the divergence. I can see. Okay, if this one gonna make the lower low, or this gonna be the lower low in M5, the divergence. Okay, they're gonna make the higher low. Okay, so we're gonna like observe at this level. One more thing, you need to wait for this candle closing with price action, pin bar, okay, or bullet engulf, and then you're good to go to buy at these zones. Okay. All right, guys. So thank you so much for doing my sessions. I'm gonna see you guys again next week. Next week. Okay. So for the webinars, right? For the education session from May onwards, okay, it's gonna cover by my colleague. His name is Moon Hong. Okay, so I won't be doing the like education session anymore. Okay, or maybe I will cover if he kind of on leave. Just tell you guys ahead first. But I'm still doing the pre-market. Okay, I'm still doing a pre-market with the alternate with him as well. But live training session is gonna cover from covered by my colleague. Her name is Christina. It's still the same. Okay, but it's just that next month onward, education session is gonna be my colleague gonna cover. Okay. If you following me, I think I've been doing the education session webinar for the IC market for I think close to 3 years, already 3 year last month. Okay, I think so. Okay, so if you're gonna support me, come and join my pre-market. Okay, every like Monday morning. Okay, I'm gonna be there. All right, guys. So thank you so much, guys, for joining me. So bye for now, guys. Good luck and bye bye. Take care.